This is Bruce Whitfield's Business Week, powered by Capitec, the business bank for everyone. Business without the boring bits. It's a weekly wrap of the most important stories from the world of business, money and finance on News 24. Each week, we share just what you need to know to help keep you informed and better understand and navigate a deeply complex, confusing and uncertain world. This week, trade, tariffs, tantrums, turmoil and everything in between. Bruce Whitfield's Business Week is the podcast that respects your time and your intelligence. Of course, we'd love to hear from you. A short voice note, about 20 seconds. Any questions or comments you might have to our dedicated Business Week hotline. WhatsApp number 072-562-3179. Include your name, because it's always good to know who we're talking to. Let's call this next bit the Brutal Biz Quiz. I haven't said that for an awfully long time. Tell me, if you wanted to become a regular feature, test your grey matter just a little bit on Bruce Whitfield's Business Week. Now, the question this week, which sportswear maker is warning that US tariffs will raise its second half costs by 200 million euros? There's a sportswear manufacturer. It's global, based in Europe. This week, warning that US tariffs are going to see its costs go up by 200 million euros. No cheating, no Googling, no asking any AI bots to help you. I'll give you the answer in the next few minutes. But the biggest story with the most immediate impact on your finances, today's interest rate announcements. No surprises, the Reserve Bank cutting rates once again, despite uncertainty around tariffs and the potential impact on growth and inflation. Plenty of evidence to suggest, including signals coming that the heat is coming out of the food prices that we're seeing. Certainly that was in the Boxer trading update this week, enough to justify a rate cut. This is the fifth 25 basis point cut that we've seen over the past year or so. Oh, and if you do want to tip us off on a juicy tale or share information you think we might find interesting, you can email businessweek@24.com. Carol Paton is writer-at-large at News 24. Tariffs very much at the top of the news cycle as our big US deadline looms. But before that, Carol Paton, a big story this week, Transnet paying big compensation for system failures to Kumba Iron Ore. Now, on the one hand, this is disastrous. It's a R1 billion check that has to be written. On the other hand, it's saying Transnet is actually sticking to its contracts and behaving like a grown-up once again, which is nice to see.
It is nice to see because we got kind of used to Transnet declaring force majeure and not paying anyone, saying, well, we're not paying you anything. So this is good news, and they should feel the pain for missing their targets, certainly.
There's a monopoly here as well, and Kumba is a big foreign currency earner for South Africa. It's got that Sishen Soldana line, which is at one time the best performing line in Africa, and it just hasn't been performing nearly as well in recent times.
All of the miners have been having exactly the same problem, complaining about the fact that they can't move their product, and this is due to the performance of the line. So the problem is, for Transnet and for all of us and for the miners really, is that these fixes to get these tracks fixed takes a long time, and they haven't even started.
Yeah, it's massively disappointing. I recall having a conversation with the chief engineer at Transnet a couple of years ago. A bridge had been hit by a truck and they replaced it within a week. And I saw that as a huge positive sign. But, I think the destruction internally of Transnet has been so devastating, it will take a while to fix it. Another story I noticed this week, it's not the biggest story in the world, but it gave me some sense of hope, is a small decline in food price inflation within the Boxer networks. Just 0.6% in the first half of this year, but it's that tiny little signal that we hope that there's just a little bit less pressure coming on household budgets. If food inflation starts to ameliorate a bit, that's got to be good economically, Carol.
It does. It does have to be good economically. And I don't know if you saw the note by Wandile Sihlobo this week saying that South Africa's had really good summer crops. So big production, big maize production, big soybean production. So the anticipation is that prices will start to go down now.
Yeah, meat prices are still sky high, but yeah, grains are going to feed through the system, literally, and hopefully bring down food price inflation. That'll be a good story. Big story on News 24, big story for the country. The disclosure from the South African government that a key sticking point in the tariff battle right now with the United States, and we're getting some sort of pronouncement on this, we suspect on Friday, is that South Africa dumped BEE in order to get a better trade deal. Now, this is classic out of the Trump playbook, but it is quite an extraordinary demand, isn't it?
It is an extraordinary demand. It is an extraordinary demand to be saying, we want to interfere in your domestic policy. And I think the South African government finds it very, very hard to deal with. So I think that what they wanted included in the trade deal was to say we want all American companies to be excluded from any form of BEE, and we want you to rethink your BEE laws. This is difficult. This is difficult, and I think that BEE is a debate the country needs to have. It is something that needs to be thought about, rethought. Like, where are we now? 30 years down the line, have we got what we wanted? Is this the kind of BEE we want? Those discussions we should be having, but to have them like by tomorrow, when the deadline for the trade deal kicks in, is obviously impossible. But yeah, it does seem to be the case that domestic policy issues are the issues that have been the big stumbling block in getting this trade deal. So I'm not holding my breath for 5 o'clock Friday afternoon.
When you look at the personality factors in this tariff decision and just how single-minded one person can be. Bolsonaro is being prosecuted in Brazil, and he's Trumpist, and Trump quite fancied Bolsonaro in his first term. They seem to get along. Bolsonaro is facing legal hassles in Brazil, and Trump saying, well, you treat my mate Bolsonaro badly, you can have a 50% tariff. All bets are off as to what sort of tariff deal South Africa may or may not get.
All bets are off. We saw what happened to Brazil. They were on 15%, and then suddenly they're hit with 50%, with Donald Trump saying that, this is, what are they doing to my friend Jair Bolsonaro? So yeah, anything can happen. And the Indians just got hit with, I think, 25%. And I think they did not see that coming, because they've had good relations with the US. And now I think overnight they were told 25%.
It is the biggest story of our times, frankly. That is the one thing you need to worry about. It is the trade tariffs and what impact that's going to have on export abilities to the United States and South Africa's desperate need to diversify its portfolio of client countries. Thank you to Carol Paton, writer-at-large at News 24. Let's talk beer and brewing on Bruce Whitfield's Business Week. Beer consumption slowing down, it seems, across the world. Certainly results from Heineken earlier this week and now from SAB Limited suggest that in South Africa, beer drinking isn't what it used to be. Richard Rivett-Carnac is with us on this edition of Bruce Whitfield's Business Week. What's happening in South Africa, Richard? Is it all to do with the weather? Is it to do with the economy, or people just don't like beer anymore?
No, Bruce, I think people still definitely do like beer, but you're right to point out that the economy hasn't been as strong as we would have liked this year. And the beer industry, as a result, is not performing at the same levels as we have seen in previous years, which comes as a little bit of a surprise to us. We would have expected the low inflation rates, the lower interest rates, the lower fuel price to ultimately make its way into people's wallets, and that should have helped the industry. But the reality is that things like illicit alcohol and a generally weak economy have resulted in the beer industry and the broader alcohol industry having a relatively tough year this year.
We have stats on that illicit alcohol industry, or the home brew industry, as those who do it might call it.
We do. We've just actually released a report on that went into a lot of detail. The home brew industry is not actually growing that much. It's there. It always has been there. What we're seeing actually is a significant increase in the amount of counterfeit and illicit alcohol, especially in spirits, which obviously impacts the broader industry. And the stats are quite surprising. I mean, it's 1 in 5 drinks now is estimated to be an illicit drink that is consumed in the market. So it's 20% of all alcohol that is consumed. We estimate it's a 25 billion rand industry for the people that are in illicit. And we estimate it's costing the fiscus 16.5 billion rand. So it's a big problem that the industry is acutely aware of and working hard to combat. And I'm pleased to say government's also very aware of it. So we're working hard to ensure that alcohol doesn't go the same way as cigarettes, which the latest estimates put illicit cigarettes at anything from 60 to 70% illicit.
We know cigarettes are connected to COVID and the bans, and suddenly people realized they could get smokes for half the price because there's no tax on those cigarettes. The booze that is being sold now also doesn't draw any form of excise duty, so therefore government is missing out on taxes there. Are they both connected back to COVID and the bans?
So I would say in part, I think slightly different in that with cigarettes, the research I've seen is that the cigarette smokers really got a lot of exposure to the illicit cigarettes, and then those became the norm for them. Whereas in alcohol, it's slightly different in that we're seeing a lot of counterfeiting. So fake brands that we know being produced with fake labels, fake caps, fake bottles.
Is it being made here or is it being brought across borders?
A lot of it is made locally. And so it is illicit ethanol, often mixed very unsafely. It's very bad for your health. The labels are imported, the caps are imported into the country, but by and large, it's being made locally and then sold as counterfeit goods. And then we are seeing just new brands pop up that are clearly illicit, often selling for less than the price of excise and VAT combined. So no cost for manufacturer at all. And by inference, you must then assume that that product is not paying excise tax. And I think the difference here, or the similarity here rather, is that there is, with excise tax being increased at above inflation year after year consistently for about 10 years now, the opportunity for the gangs and the organized crime to get into this industry is very, very significant. The price difference between something that is produced without paying excise and something that is paying excise is enormous. And that frankly just creates a huge opportunity, which we need to address.
That's got to be addressed. Obviously, it's a law and order issue. It's a consumption issue as well. What about then the future of investment in capacity in South Africa? If this is what is really happening, the incentive for you to invest more, to produce more, is taken away somewhat, isn't it?
Bruce, ultimately, that's right. I mean, I think that if we don't get our heads around this and start combating it, we will see an industry that will struggle to grow. And if the industry is not growing, the investment dries up. That's the bottom line. If you don't need the capacity, you won't invest. So it's a very important problem that the industry faces at the moment. And as I said, we're taking it seriously to combat it. But that being said, if we can get it right, we see good opportunities for real growth, sustained growth. It's never massive, but it's a big industry. And if it's growing 2.5% per year, that will require investment. And with that investment comes jobs from the agriculture sector, to manufacturing, to transport. The value chain is very deep. We estimate 1 in 66 jobs in the country are supported by the beer industry and the beer value chain. So a big contributor to employment, but obviously we need to ensure that we see responsible and sustained growth to fuel that employment.
Richard Rivett-Carnac is the Chief Executive of SAB Limited, part of AB InBev. Well, the streets of Edinburgh are festooned with posters advertising the world's third biggest ticketed event after the Olympics and the Soccer World Cup. It's the Edinburgh Fringe Festival. Its chief executive is Tony Lancaster. If that name sounds familiar to you, then you are, at one point, a listener to SAFM on a Saturday morning, where he was, of course, the program manager and a radio host. He became the chief executive of the Arts Festival in Makhanda, and now is the chief executive of that world's third biggest ticketed event, the world's biggest arts event, in fact, the Edinburgh Fringe. 4,000 events, Tony, coming in the next 3 weeks, the first 3 weeks of August. Give us a sense of the scale of Edinburgh versus Makanda?
The scale is vast. As you say, around about 4,000 productions that take place in the course of a 3-week period. If you were to watch every single production that took place in Edinburgh back to back without any breaks, so you watch them 24/7, it would take you about 5 months to get through every single production. If you were to watch every single performance, because of course each production does multiple performances, it would take you just over 5 years, I think, to see everything. That's the kind of data that I love, because it lets you sort of really bring this home. But of course, the people who attend the festival don't have time to see all of that, or the bladder control to sit there 24/7. So we have to make it as easy as possible for them to pick and choose from this vast array of stuff. But as compared to Makanda, which was your question, I think when I was there, we were selling about 200,000 tickets, and we had about 800 productions, broadly speaking. It's significantly bigger. We sold just over 2.6 million tickets over the course of the Fringe. And I'm happy to say that in the interest of preserving some trees, they're all e-tickets now. So are not actually printed out in little bits of paper. But yeah, it is a different beast. But there are more similarities than differences, if you like, between Grahamstown and Edinburgh. And I think a lot of those similarities are around the way people experience this festival, the way that the city is given over to this massive celebration of stuff. And also a lot of the underlying stuff, the economics of it, the politics of it, the things that people speak about on the streets when they're not speaking about the shows they've seen. There's a huge resonance for me and a lot of similarity between the two festivals.
How edgy is Edinburgh? It used to be the edgy spot. It used to be the place where the comedians would launch. Comedians are now minding their P's and Q's for fear of being cancelled. Is there a worry about that on the streets of Edinburgh this year?
Last night I watched a man dressed as a penguin wearing a tuxedo top and a pair of flippers and nothing else. And I mean nothing else. And he was reviewing every book ever published by Penguin in the course of his show. That was pretty edgy, depending where you were sitting in the auditorium, I guess. The edge is absolutely there. Artists have always been outspoken. That is the nature of them. That is the joy of them. And festivals like this bring it all together. And as the Fringe Society sitting in the middle, which is the organization that I lead, our job is to make sure that everyone gets an opportunity to be heard. I don't think there's a lot of self-censorship that's going on. I think people are quite comfortable saying what they want to say and what they need to say. And audiences react and respond in different ways. But I think that impulse to speak truth to power is something that has inspired artists and brought artists to the stages of the world for generations. And I don't think that's going to change in a hurry.
Talk to me about the money. I saw you talking to our mutual friend Richard Quest on CNN the other day. You were talking about the loss of a big sponsor. Johnny Walker has been a key sponsor of the Fringe for the last 20 years or so. They've pulled out. Are your ticket sales going to cover costs? So is the Fringe going to wash its face, or is this a big crisis in the arts?
Yeah, far be it from me to accuse the media of overblowing things. But I think it's worth pointing out that the Johnny Walker sponsorship was less than 1% of our total revenue. So it's not a significant blow. Of course, it's cash that we would have had in the bank, and it would have been good to have in the bank. They came to the end of a 3-year sponsorship deal and they decided not to renew. That happens. It's happened to me in countless situations. And also what happens is that other sponsors come in and fill the gap. The Johnny Walker story is perhaps a little bit of a red herring. But having said that, the commercial environment for sponsorship is tough, and it's no tougher in the UK than it is in South Africa or any other part of the world. Corporates don't like risk, they don't like chaos, they don't like uncertainty. And what a festival, particularly like the Edinburgh Fringe, gives you is all three of those things in abundance. It's the nature of what we do. So really what we need is not just sponsors, but we need the right sponsors. Sponsors who can come along for the journey, who are thick-skinned enough, who are brave enough, and who believe enough in what it is that we do and see value in it to be able to invest in it. I would argue that the arts is a massive sleeping giant in terms of return on investment for corporate sponsors. You know, you go and watch a sports match and you step into a stadium and you just blitzed from every single conceivable angle with another billboard or a t-shirt or an activation or something going on around you. And the noise surrounding these big events is massive. The arts doesn't have that at the moment. Now is the right time for someone to step into the arts. And the most successful sponsorships are ones where people step in and solve problems for customers. So one of the most elegant sponsorships that I've observed was in Makanda, getting around the city, is challenging, it's difficult, it's tricky, there's no public transport. So one year, Standard Bank invested in some tuk-tuks to drive around the city and help move customers from point A to point B. They identified a problem, they solved a problem, and got massive kudos for doing so. They didn't try and intrude on the experience. They didn't try and say, hey, look at us, we're more important than the festival. It's not just brandalizing, putting your logo on everything, trying to get Hamlet to perform in a t-shirt. Those kinds of sponsorships are old school. That's not how effective sponsorship works in 2025.
Tony Lancaster, Chief Executive of the Edinburgh Fringe. So earlier I asked you a question. Well, I asked you two questions. I said, do you want the Brutal Biz quiz to become a feature on Bruce Whitfield's Business Week? Because I think it'd be quite a nice little addition. I asked you, second question, which sportswear brand warned this week that US tariffs will put up its costs by 200 million euros? The answer, Adidas. The consequences of that, of course, a looming hike in sportswear prices. Now, nearly half of Adidas products are made in Southeast Asia. Previously, it has warned it simply cannot manufacture most of what it creates in the United States. We've got the rival Nike, the American giant that was made possible by offshoring manufacture decades ago, warning of a similar impact 2 months ago. So certainly, although we're seeing good growth coming out of the United States, we're seeing inflation behaving itself and huge pressure on the US Federal Reserve. Jerome Powell this week, Jerome Powell was cautious once again about cutting interest rates. He's in no mood to do so because of these sorts of anomalies that are going to start coming through. Adidas, the answer to this week's Brutal Biz Quiz.
Why pay more for business banking? Does your account come with a private jet, a 5-star lunch, a butler named James? Didn't think so. At Capitec, you get the same low fees as personal banking, so you always know what you get and what you pay. Open your account in minutes and save up to 50% on transaction fees. Visit capitecbank.co.za to get started. Capitec, the business bank for everyone. Capitec is an authorized FSP. 46669. Conditions apply.
Let's look at what's happened across markets this week. A fairly flat week in terms of the overall market on the JSE, with the currency a little weaker than this time last week. Sibuliso Ngomalo is the Chief Investment Officer at the Old Mutual Investment Group. Sibuliso, big story today in SAB Miller. What strikes me as I say SAB Miller doesn't exist anymore. In SAB, which is part of AB InBev, it's been a decade since AB InBev bought SAB Miller, and the entire company today is worth only a fraction more than what AB InBev paid for SAB Miller, $100 billion, more than 10 years ago. And it's just been a disastrous investment from that perspective, and beer sales are struggling. It's not a happy space to be.
Anheuser-Busch InBev, which is the largest beer company in the world, almost a decade ago, 2016, bought South African breweries for 100 billion. And if we look at today, Anheuser trades at around 130 billion. And so therefore, what happened when we look at market valuations at that time, at the peak in 2016, Anheuser was trading on around 29 times earnings, and now it's trading at 16 times earnings. And basically what's happened here is the share price was $131. Now it's around $61. And so therefore, this was a terrible acquisition done with a lot of debt, and it's come at a very high cost. And they certainly did not get what they thought they were going to get from SAB.
Yeah, and it's a fundamentally different beast. And it was interesting to chat to Richard Rivett-Carnac earlier and just get a sense from him as to the illicit booze market in South Africa and the impact that's having on sales. Talking about MTN, which has long been struggling in Nigeria. We saw MTN Nigeria results out this week. Is there a sense of hope and optimism that investment that they've stuck to through thick and thin may pay off?
Yes, no, I mean, we saw obviously what MTN did, which I think was a very smart thing, was to list part of their business, the Nigerian business. So that's listed in Nigeria. And one of the issues with Nigeria was ultimately the currency. And so last year we saw a material devaluation in Nigeria. And that then obviously means that the company, MTN then couldn't extract dividends from Nigeria. Nigeria is the biggest geography, so the most profitable geography. And obviously Nigeria, Bruce, if we step back in 2014, they had that big fine in Nigeria, and there was another currency devaluation. And since then, MTN is always traded at a discount relative to its other peers on Africa and globally, because everybody then puts that Nigerian risk on MTN. But we saw MTN Nigeria released results last night. Profitability is starting to recover, and they are hinting that before the end of the year, they then would have returned to profitability and positive equity, which means they can pay out dividends. So now this is why the market is excited. And so a very profitable entity, but Nigeria's got its risks, and the market doesn't like these risks. So, but a pleasing outcome from MTN Nigeria.
And then the jury's still out, I suppose, on the long-term impacts of the trade war. Donald Trump this week claiming credit for sharp second quarter recovery and growth in the US economy. And second quarter grew at 3% despite shrinking in the first quarter. He's still putting pressure on Jerome Powell, who's showing no signs of blinking when it comes to interest rates. The biggest story of the week has got to be the continued trade tussles around the globe. Trump's trade tussles.
Yes. I think that the thing here is that the market gives feedback. And so if we go back to Liberation Day in April, Trump obviously came out and said, these are all the tariffs to the world, including the penguins, and the markets reacted. We saw a very sharp drawdown in the market and a pullback. Trump then reacted and said, okay, we are going to give it time and we're going to negotiate with lots of countries. And so the market then roared back to life. And if you look at the US economy is looking strong. And also he has done some deals with quite a few nations now. And so what is happening at this present moment is that the market feedback is that, one, the US economy is strong. He is able to bully all these other different nations into submitting to his will. And so therefore, he might as well keep going because he's not harming anybody. But Bruce, I just want to mention, why are tariffs such a big thing for Trump? Basically, if you look at what's happened in the US, if you look at their tax revenues, which is very similar actually to South Africa, their tax revenues versus their government expenses, there is a big gap between those. So the US is spending far more than it is earning in taxes. That's called a deficit. And that deficit is just around 7%. So it's a very big deficit. It should be around 3%. And so therefore, you've got two choices when you spend more than you earn. It's either you're going to cut costs, which is what Elon Musk was trying to do with Doge, or you're going to increase revenue, which is what they're trying to do with tariffs. So they've taken the option then of saying, hey, can we increase revenue? So they've got to keep going. They have to keep trying. And so far, the market is saying, no, keep going.
It's going to be interesting for us, of course, in the next couple of days as we see what our trade deal, for what it's worth, has to offer. Siboniso Momalo, thank you very much indeed, the Chief Investment Officer at the Old Mutual Investment Group. Well, every week, certified financial planner Warren Ingram and I helping you to develop a step-by-step guide to help you reach financial freedom. In less than 3 minutes a week, we give you just one action you need to take each and every single week. And if you follow what we suggest, it'll take you closer to financial freedom. It can't do anything else, but you have to do your bit. All of us know that the crippling impact of high interest rates. And that, of course, is the first step to where financial freedom starts. Have a listen to Warren this week.
For me, I always think of debt as a weapon of wealth destruction. It's the one big thing that derails us. And a lot of the time, it's very easy to get debt and it's very easy to spend your debt. So it's something that we need to tackle head on and make sure that we've got a proper plan and a solid way of addressing our issue with debt.
So debt is everything from car loans to mortgages to credit cards to loans to friends and family, loans from friends and family, all of that stuff. By now, we've got a picture of it because we wrote it all down. We've now got to look at the debt that we've got and really confront it.
Understanding that when you ignore debt, it doesn't go away. If you ignore the email from the debt provider, hoping that it will just end one day, understand that it's compounding against you. It's growing and growing and growing faster than anything you could possibly hope to accomplish with your money. So it is important to take stock and to have a plan to deal with it so that you start to use compounding for you and not compounding against you.
I don't know if he ever said it, but it's attributed to Einstein, and he's described it as the eighth wonder of the world. And that was the power of compounding. If you understand it, you can make it work for you. If you don't understand it, this is where debt comes in, it works against you. And it is terrifying to watch the level of debt accumulate, particularly on something like a credit card, where interest rates are excessive. Once you lose control of that, you get into some really very, very, very serious trouble.
I think that's true, Bruce. And we both dealt with people that have achieved financial success, all around the world. And I think the one thing they have in common is they don't use debt to consume things that, like holidays and consumable stuff. They might use debt to grow assets, to grow businesses, but they avoid, like the plague, debt to buy stuff that has no value. And that's the key.
So what is the one action we can take this week, Warren, to properly assess and prioritize this problem of debt?
Warren Ingram. We're going to ask you to write down all of your debts that you have today, no matter the size, whether it's 1 or 10 or 100 or 1 million, write it down. And then next to that, write down the interest that you're paying on each of those debts. So something might cost you 10% a year, something might cost you 25%. What we want to know is take that debt, write it down, and then write the interest rate against that. And that becomes the beginning of your debt plan, because what you want to do is take that most expensive debt and start paying it down. But the action for now is write them down, go and get all those interest rates that you're paying, and let's find out what's the one that's costing you the highest rate of interest.
My thanks to Warren Ingram. He's a certified financial planner at Galileo Capital. If you're making a big decision and you ask yourself, what if the opposite is true? You'll find possibly getting better outcomes. It's the cornerstone of a man called Asbjørn Raklu. He's a Norwegian police detective who led a 9-month interrogation in 2012 of mass murderer Anders Breivik. Chatting to Asbjørn Raklu on the Art of Deciding podcast, I found Asbjørn fascinating, and he challenged the way in which traditional police interrogation works, in detectives simply wanting to secure a confession so that they can get their next promotion, and often leading to wrong outcomes and to miscarriages of justice. So here's that thought for the week. If you're on the cusp of a big decision and you are making a heap of assumptions, try asking yourself, what if my assumptions are wrong? What if the opposite of what I believe is true is in fact true? Could I survive that? So if the next move in interest rates is actually up, not down, will I be able to afford my house? If the answer is yes, well, then you've got a margin of safety. Ask yourself that. Whenever you've got a big decision to make, and you've had to make lots of assumptions, Asbjørn Raklu, Art of Deciding podcast, what if the opposite is true? Now, we'd love to hear from you. You can send us a short voice note, 20 seconds or so. Questions, comments to our dedicated Business Week hotline. WhatsApp number 072 562 3179. And while we're here, what's your favourite quote of all time? Share it with me. And if I think it's wonderful, I will share yours with everyone else. And why do you think it's wonderful? There we go. There's a challenge for you. Get in touch. Thank you for listening to Bruce Whitfield's Business Week on News 24, powered by Capitec, the business bank for everyone. For now, bye-bye.